Hello everyone and welcome to another FxEdge Power Hour. Today is February 12th, 2013. I am Marcello Ducille. Today we're going to do a daily market analysis and then we're going to do a daily strategy evaluation. And this is what I've done for the last almost decade now as a full-time trader. And then we'll have a brief questions and answers session. So let's go ahead and get started here. Taking a look at the charts here. There's stuff to talk about, but not as much as you'd like. I took a few good discretionary trades. I'll talk to you guys about that in a bit. But there are also some other opportunities that were available to us, and they will continue to make themselves or reveal themselves, I should say, as we go forward and as this market continues to unfold. So, looking at the euro dollar here, you can see here that we had a change from green to red. And that really started off our sell, and really you can see how price moved down very nicely, about 300 pips. That was not a valid trade for us. We did not take this as a discretionary trade. I'm sorry, as an automated trade. This would have been a discretionary trade if you had other keys to really get in on this thing. The only other thing that there was to signal that a move was potentially pending was, that we hit this 23.6. We hit a area of support resistance at 13700, and it pulled back. I mean, but you couldn't really have told that, to be honest with you. It did line up with some fib extensions as well, but really it was just one of those trades. Now, looking at where we're at right now, let's talk about that. You can see here that we formed a very nice area of support. And that area of support is at the 1.3350 area. You can see here that our price went down to 133.53 on February 8th, February 11th, 133.56, and today as we bounced off at 133.63. And you can see here that we were in a very tight range for the last 2 days. Here, 134.27 was the high there. 134.26 was the high of the next day. And you can see here that today we've, relatively speaking, was an explosion up to 134.75. So, in all, it's not a tremendous amount of movement. About 113 pips. That's about the kind of range that we'd expect from high to low on the euro dollar. But we can certainly expect to see some more movement. And I still consider us to be in a consolidation at this point. We don't really have signs that this thing is really out and broken out in one direction or the other. Consolidations are good for us. They tell us where the market is going next, and we can see something really begin to manifest here or to unfold. And really, right now, this is where our trend lines really are lining up. And so that's the upper area. You can see the lower area as well. We could potentially be looking for a breakout. Now, let me actually make this a little bit zoom out a little bit here. All right, so looking at our potential apex, you can see here we've got multiple points that hit 1, 2, 3, 4. This is a very steep, resistance line here for us to consider. It's very, very steep. To be honest with you. So we'll have to wait and see if price actually just, breaks right through it. We do have a line here, though, that we should be considering. And we'll actually see where price goes from here. Maybe it'll come down and hit this area here, which is really about the 13300. And it's kind of what I expected. I expected price to come down to the 13300 area and then bounce off and move back to the upside because we have so much strength on that secondary trend line. You can see this trend line here. And that trend line goes all the way back. If I can take this trend line, oops. If I take this trend line I've just drawn here, I can actually draw it all the way back to over here. And you can see that it lines up still very, very well. So that really becomes a very strong area for us for support. It has held for the last 8 months or so, let's say 7, 8 months or so, and so that would be considered a very strong area of support for us. And so that's what we're kind of looking for, bounce off that area. We'll see where the market takes us. I was actually looking for 132.50, 13300 on that vicinity for the market to bounce off of. It very well may still happen. We'll have to wait and see what happens on this particular day. We are in an apex here. It's kind of a steep apex. We'll have to wait and see if the market responds to it or not. But you know, in this apex, you know, when you get into this area, you generally are primed for a breakout in one direction or the other, and so we'll be waiting to see, you know, what direction the market takes as far as that's concerned, and where we go from here. So there you have it. That's the euro dollar. We're currently flat in the market. We're looking for a change from red to green eventually. I'm glad we haven't had it yet on this bar today. It didn't, you know, I think there's still room to the downside here for us to find support and to really get a very good foundation for a push to the upside once again. So that's on the euro dollar. Right now we don't have a trade. Now the dollar Swiss was an interesting trade. I mean, we talked about it. We talked about the dollar Swiss a lot. And we talked about the dollar Swiss for a lot of reasons, because one of the reasons, of course, being that we had this beautiful reversal candle situation here at the top right off of the 200 on the dollar Swiss. I talked about it the other day, and if you look back at the tapes back to this day, I would say the January 21st, in that vicinity, you'll see that I talked about it extensively, about a beautiful, not only a change from green to red, but a beautiful discretionary trade that we could have here with lots of confluence. You know, the change from green to red on the dollar Swiss histogram, STP histogram. Also the, you know, the fact that we have a beautiful reversal candle, 2 reversal candles in a row that bounce off that 200 MA. You know, there are a few things that happened here that gave us plenty of reason to believe that this thing could continue to move. And boy, did it ever. It dropped 330 pips, which is a big number for the dollar Swiss. You know, we would have had about 45 pips of risk on this trade, about 50 pips of risk, and potential all the way down to 326 pip maximum favorable excursion. So that's what we're looking for. The other day, and this would be February 1st, what we talked about, or February 2nd, February 4th, sorry, what we were to talk about, or February 5th, was the reversal candle that we had here that formed right on this very strong area of support, which is that the 9088 area. You can see why it's strong. 1, 2, 3, 4 touches here, followed by this beautiful 61 pip. This would have been a beautiful reversal candle right off this area. It actually is exactly like this. It's an inverse. It's actually a mirror image of this particular pattern here. You have this very small reversal candle followed by another larger reversal candle, and you can see here that that we have the very same thing, and that was on the sell side. We have the very same thing on the buy side. Small reversal candle right on that area of support and resistance, followed by a much larger reversal candle that was also at this area of support and resistance. You know, it's not by accident. These things are actually, it's just interesting to see the intelligence of that is built into these charts. But anyway, we had 2 days of dojis, which was clearly hesitation, nice little fake out here, bouncing off this upper side of the trend line here that was broken, and then finally the market just bam, just throws it in the opposite direction and moves up to that 9200 area. We talked about the 9200 area being a very strong area of support, of resistance, sorry, and you can see here 1, 2, 3, and the 4th touch here at 9205, and I talked about that just yesterday. You may want to watch that tape or that recording, because you know, we were right on as far as that's concerned. Now, if we were right on about this 9200 area because it was a repeated area for touch for this touch here, let's go to a lower time frame just for, you know, giggles. Let's go to a lower time frame and let me show you how you could play this thing. So 9205, we knew that was coming. I said it was coming. By the way, this is something that we're coming out with. We're coming out with something new where I'll actually show you how to use these analysis, this analysis to make money in the markets on a regular basis. As you know, I'm pretty decent at this part of it, and some of my other traders are very, very good at it as well. So it'll be good. Anyway, so here we have, like, for instance, a 1 hour. You can see here on the 1 hour, these are the previous days. Okay, this was the previous day where we had the same market action, and this was yesterday. Okay, This is getting into yesterday. You see this reversal candle here, another reversal candle here. Just placing that above that 92, even just giving yourself a stop of 30 pips, even not even that, 25 pips, 30 pips. You would have had a nice downside here of 50 pips or so, just getting right back to the 200, which was actually 200 on the 1 hour there. So I mean, there were tremendous opportunities there. There were great opportunities for you to take advantage of it from the 1 hour, even down to the to the 15, etc. And basically, it's just the same thing over and over again. And so that's the dollar Swiss. So as far as the STP is concerned, we're waiting for another trade. We're waiting for an opportunity. We'll be waiting for a change from red to green, or I'm sorry, from green to red, so we can get into a sell here. And that would pretty much give us what we need for the dollar Swiss. Dollar Swiss has been a high probability trade for us. It was high probability trade in 2012. We look forward to seeing it do some very good things going into 2013 as well. So right now, that's what we're looking for. Honestly, right now, guys, we're kind of in a nebulous zone. I'm actually going to wait and see where price goes from here, because we do have an upper and lower band here. If you look at these three candles here, in 91.50, 91.50, 91.52, 91.54, and 91.47. So that forms our lower area there as well. So you've got about a 50 pip area of consolidation here for the last 3 days on this dollar Swiss. And so watching for a breakout of that zone will be pretty much what you want to see on the dollar Swiss here. So all right, so pound dollar does it again. This is interesting. It basically had, the previous day had a sell-off day, so it sold off. And this was when the euro dollar actually was moving up slightly, though, but not a lot, but it did move up, and this moved down. And so we had another day where the market tested the low here and actually got to 155.70. You can see this hammer formed here. We're right still, guys, still hanging out in the same area for the last few days. 1, 2, 3, 4, 4 touches. Obviously, this is a test of the low here, getting a 55.70. But really, at 5,600, we had a lot of action. Here, and price really holding in this area. What we're looking for here is a change from green to red. That's where we're at right now. We don't have a valid signal, so we're not going to take any trades here. So when we do have a valid signal, we would take a sell if it gives us that opportunity on the pound dollar. So we'll have to wait and see that when the time is right. So right now we have a reversal candle on an area of support resistance. You got to expect for the signal itself is just giving us a potential buy signal. It's holding that same area, so it's looking for a buy here based upon this signal alone. We'll have to wait and see where it really goes, because the pound dollar has actually acted in a not exactly the most predictable manner, I would say. Here, having reversal candles thrown at very good areas of support and resistance, and then actually falling below them, and you can see this on the weekly chart here where we are. So we're going to wait and see where price goes from here on the pound dollar as well. We'll wait for the STP signal, but we don't have it right now. Same thing on the pound yen here, guys. We're just in a consolidation, back and forth, back and forth. Today, honestly, today was another great day to trade the pound yen. Okay, if you look at it here, we have this upper band, and we designated this yesterday at 147.90, and here at 145.21. Okay, so you can see that lower area, 145.21. We talked about this yesterday, and then we had an upper band here at 147.90. You can see that price goes up to 147.75 and then falls down to 145.25. There was definitely a lot that you could have played with on this particular trade, going down to the 1 hour again for giggles, as I said. You'll be able to see that action. So you can see 145.21 here, repeatedly being bounced off of by this nice triple threat here, nice triple threat three trade here to the downside, beautiful right off this 147.90 area. Okay, and that was our area. Those are our areas of support and resistance that we can look to, and until we're right back in that zone, because that's where we have been hanging out, and that's where the market has been for the last last few days on the pound yen. So those were good opportunities here. Sell, buy, sell again, buy again on the pound yen on the 1 hour, for us to take a look at that there. But we're waiting for a signal on the STP pound yen here. We still don't have a signal, and for good reason, because we don't have any movement. This is still in consolidation. If you really look at it, back from February 1st until now, we have not broken this low, nor have we gone past our set highs now at 147.90. So we're going to wait and see where price goes. We're smack dab in the middle there, and so we're going to have to wait and see if price gets down at 1521 area or the 147.90 area, which are 2 points of decision. You always take your trades there. You'll be just fine. All right, so that's the pound yen, currently flat in the market. Aussie dollar. Aussie dollar is another one. Here we have it. It was a day that was analogous to what we saw in the euro dollar and even in the pound dollar in some sense. And you can see here that it bounced off that very key area, 1.0288, that we had designated earlier, and you can see why, because it's had multiple touches here on this daily chart. 1.0288, this is a reversal candle. If you do take this to a buy side, you're going to be looking for about 70 pips to the upside. It's about 1-to-1 ratio here. Not exactly the best odds, I would say, on a trade, if you were to take a discretionary trade. As far as looking from the STP standpoint, we had a change from green to red, and that was a while back. We got into it, we made money on it, and then what happened was that price comes back and it closes us out at break even. My backup battery here. Sorry about that. Okay. Sorry about that, guys. I apologize. It's like I had a bit of a power issue there. Okay, so where was I? All right, so the Aussie dollar is currently at an area of support and resistance. It's got some upside here. We're going to be looking for a change from red to green to get us into a buy again on this Aussie dollar. To be honest with you, there's they're not extremely strong signals that we're getting right now. I mean, we do have a reversal candle. We do have a 1.0288 area, which is our area of support. That has been a good area of support. But, the upward, we're going to get a lot of resistance here at the 200 EMA, and it's really, it's not even a 1-to-1 ratio if you put your stop at the bottom here. So that's something to think about for you if that's what you really want to do as far as that Aussie dollar is concerned. But right now we don't have a STP Euro Yen trade. Now we do have an STP Aussie dollar trade. We do have an STP Euro Yen trade here. We got into, it was a change from red to green here, got us into a buy. Had a maximum favorable excursion of 700 pips, 698 pips, and has taken us up to, and where we are currently is about 500 pips of profit. And so if price continues to hold in this range and we don't get kicked out of this trade, we should potentially have another buy, another opportunity there. All right, so here's another thing, is that we have a change from red to green that's showing up here. And so if we, here's what, a couple things can happen here. We can get a sell-off and price can drop here and that can reset our sell, or we can get a sell-off here and that can, we can still have a green bar and then price would have plenty of room to go to the upside on the Euro Yen here. Or we could see price just break through this area and move to the upside, which would be a safe bet for our Euro Yen buy trade there. So you can see that we have a change from red to green. This green bar is open, so we don't actually have a trade yet. We'll have to wait and see where the market goes from here. And honestly, it's not that clear cut at this moment. Honestly, we still have these ranges to play. As you can see here, we went up to 12700, which was our inner range here. You can see our inner area of resistance here, our lower area of resistance at 12700. Price went right to it, 126.92, and bounced right off of it and headed to the downside on the Euro Yen, which was a great trade. I actually took this trade in our Tribe Forex website for my VIPs, and basically this is this would be a textbook opportunity. There's room to the downside still. We've been playing this range. We're gonna continue to play the range until we see a breakout of this range, which we should see honestly very, very soon. I mean, we've had multiple days, 1, 2, 3, 4, 5, 6, 7, 8 days of consolidation as far as the daily chart is concerned on the Euro Yen. So we should be expecting that. All right, looking at our 4-hour here, we had a change of Quattro. We had a change from red to green. That was not valid. We had a change from green to red. That was valid. Gets us into a sell trade. That sell trade is actually stopped out, and you can see that's what happens in a consolidation, is that you get played with, you get back and forth here. We did have a change from red to green again. Gets us into a buy. That buy is 40 pips. Okay. We have a 40 pip stop loss. We're looking for 40 pips on the TP side to 13500 basically is what we're looking for to get that profit on the Quattro there. But there's no real movement, guys. When you have no real movement like that, it's not the best time to trade if you're not going to if you're looking for a trade like this. You really want to have some movement. It's much better pickings for us there. All right, so let's take a look at the IBO. All right, so IBO, we had basically a 3-bar IBO form, and this is a 1-bar IBO inside here that we were looking for. 133.80 is to the low side we're trying to get to, and basically price breaks the low here, and gets us into a trade. We're looking for 29 pips of profit here. Price moves down for about 15 pips or so, gets us to a first take profit on this trade here. And then it ends up moving up in the opposite direction where we have another IBO set up here. So it depends on you on the IBO. It's very, very close. It could really be, you could have gotten out of this trade for profit here on the first position and close out a break even, or you could have got stopped out. If you did get stopped out on this trade because it was very close, it would be about your stop loss. You'd have 24 pips to look to the upside. You'd hit your 15, 20 pip mark as far as profit is concerned on this first position, and you still be in a second position on the buy up 50 pips. So this is not a bad position. If you close it out right now, you'd actually close out for profit off of both of those trades. So there you have it. No, Celia, we definitely have a buy limit here on the BW, so don't change that. There's a buy limit. Okay, so let's talk about this pound dollar. Pound dollar, we had it change from red to green. That's right, that was 2 days ago. 2 days ago we had a 2 days ago we had a buy trade on the pound yen, on the pound dollar. I talked about that yesterday. Okay, great. All right, so my last two IBOs were closed at break even. That's perfect, Matt. Thanks. And it really just comes down to your spread. Sometimes these trades are so close, it just comes down to your spread. It's really incredible. All right, so that is where we're at. I got to figure out. As far as my lineup for the STP5, guys, once again, the Euro Yen is top billing, of course. Dollar Swiss is next up in line. I like the pound yen. I like the Euro dollar. Thereafter, Euro dollar used to be our top trade, you know, obviously over the years. But because of the weakness of the Euro and the weakness of the dollar, that has become a much less productive trend trade. Whereas the yen pairs have really moved into the forefront and moved into the vanguard and really have made a tremendous amount of profit for us over this last year and some. So you know the Euro Yen is really our top trade there. The pound yen is not as good as the Euro Yen, and most likely because of the fluctuations we've seen in the pound itself. But you know, thereafter, you know, the Euro dollar is always good, and the pound, the dollar Swiss has always been a good trade as well. All right, so the IBO Rev is currently closed. We don't have a trade right now on the IBO Rev. Oh, yeah, we do actually. I'm sorry. No, actually, it hit its first take profit and then moved to break even, I think. Yeah. So it made profit on the first position, second position closed out. All right, triple threat 3, we had a sell opportunity here. Basically, we had about 35 pips of risk here. Price moves down 26 pips. We're looking for 17 pips of profit. We got to take profit. Second position moves to break even. We were in a sell mode. Currently now we're in a buy mode. That means that we're looking for a change. We're looking for a break above the 134.62 area. Potentially we'll have a buy move on this triple threat 3X. That's what it's looking for, but we don't have it currently. And once again, this is we're in a consolidation for the most part here, and that's what you're going to see. On the ATR sniper, we had a potential buy trade here, and you can see it right here. Let me just go ahead and I should add my volatility in on this. All right, we're looking for 29 pips on this trade. That was an easy target here. We did get it. You can see price move down in the opposite direction. Hit our first take profit, move down. It went to break even. Now, if that didn't happen for you, you still had you were still in this trade and got out here. So you did get out for first take profit on the ATR sniper. You should have there. And for some of you like us, you probably moved to break even on this trade as well. All right, so that is that as far as that's concerned. Okay, BW, we are currently waiting for a pullback, and we're looking for we've got some trades in place. You'll notice that you'll have some pending orders there, and basically, you know, we're making buy plays in the market here on the BW, and so you'll be looking for those trades to be taken when we reach it in a level where we feel like the euro is done consolidating. No point in giving away money during a consolidation, and then you'll see price moving on. We have pending orders in, guys. Those pending orders are for your safety. They're for you. So just, you know, relax. Let those things stay where they are in your account. It's up to you, but you know, that's a part of the plan, is what I'm saying, is what we're doing. Nope, no trades active in BW right now. Yeah, I'll take a look. I'll actually take a look at that, Matt. All right, guys. Thanks for your time. It is 5:45 p.m. Looking forward to getting you guys, you know, getting back into the market where we actually have some real movement. I'm kind of happy that we're not taking too many trades right now because there's not a lot going on. Honestly, it's been back and forth here. The only currencies that have been moving have been the yen pairs, and even they are in consolidation right now, as we've seen on the daily chart. So it's really dangerous zone to be trading, to be honest with you, unless you know what you're doing. And you know, so anyway, we'll wait for better opportunities to present themselves as the market kind of unravels out of this consolidation. All right, guys, thank you very much for your time, and I look forward to seeing you tomorrow for another edition of the FxEdge Power Hour. Bye-bye.